So, oil.
Oil. So it's Wednesday. We get the EIA numbers every Wednesday, 10:30 a.m. Eastern Time. We're going to jump over to the NADEX platform. We got the crude oil July futures contract up. We're trading almost to the penny, $66, okay? Now, we're going to start things off. So let's start it off on the lower end, as in lower, smallest time frame. These are expirations at 11 a.m. And what's nice is we're trading at literally within a penny of 66. And starting with the 11 a.m. expirations, we get the EIA numbers exactly 10:30. These 11 a.m.s expire at 11, so we'd have about a half hour of exposure. And we're going to look at setting up a volatility trade. So we're going to look at possibly both sides, and keeping in mind that you don't need to make both sides. This is a volatility trade where you're basically directionally biased, as in no direction, you're biased towards volatility is going to spike compared to the premium.
And you got a good number. We're at 66.
Right, so we have a bullish spread here that would go from 66 where we're at up to 67.50. We have a bearish spread with the same $1.50 just to the downside. All right, you'd be buying the bullish spread, you'd be selling the bearish spread. They're almost identical. The only difference is now we've ticked up about 3 pennies, so you have a few pennies of intrinsic value. So you're looking at about $41, $42, which represents 42 cents of movement in the underlying price of oil that you would need from 66 to become your break even.
Right.
That's the 11 a.m.s, all right? Now, when we jump around to these, the 12s seem to be most attractive, in my opinion, and these are going to have the same exact price point, which is nice, okay? So we're dealing with the same exact prices.
Get
the
extra hour,
only difference is an hour, which is really cool because we get to look at the price, and there's no other variable that's different.
Right.
So whatever the difference is in price, that's what that hour is costing you, right? And so look at the upside. Automatically, that extra hour is costing you a little bit much on there.
10 cents.
Yes.
Yeah.
And on the downside, it's going to be somewhat similar. And as we're now 4 pennies above where we're at, so you're looking at about 45.
And we were 41.
We're 41.
That's interesting.
Yeah. And that would make sense, as in, the bullish spread has ticked up a bit, and as we recalibrated, okay, we're jumping around here. But yeah, so you're looking at about 45, 46, and that's why I even said it before. It seems like if you're going to make this trade and you're looking for volatility, the market doesn't really charge you a lot of money for that extra hour because there's a lot of that premium that's priced into just the 10:30 number. Because that's where you're going to get a lot of action, right? So it's interesting. But so that was our noon. Now it's interesting. We'll jump to the dailies. Now, these are the same exact price point as in 66. Now, there's a couple things different, though, as in you have till 2:30 now.
Right.
Lots of extra time. But you also have $5 of exposure as opposed to the $1.50. So if you ever got a tremendous move in one way or the other, you have profit potential up to $5 from where we're at. Now, this is going to get a little pricey, though. And really, the premium is going to be for the time, most of it.
Yes.
They're not really charging you for the $5 because realistically, oil is not going to move more than $1.50 by 2:30, 99% of the time. That's where they're pricing. So you're paying for the time. And they're going to charge you a little bit, as you can see. We're going to get up. It's going to be almost $65. Okay. All right, but you're paying, so the 11 a.m.s were like 41. The noons are about 45. You add an extra 2.5 hours on that till 2:30, paying about 65. And as we've seen, though, you get some volatility around 10:30 for sure. But, man, these oil markets have been rocking throughout the entire day, whether it's Wednesday on EIA day, whether it's API on Tuesday. There's always some action. So it's interesting. That would be our bullish spread. That would be a bearish spread. And again, if you're directionally biased,
it's laying right at it, which is pretty cool.
And that's, if you're directionally biased, this is even a great opportunity, as in you don't need to pay for any intrinsic value on the bullish or the bearish.
Right. You can figure it out after it comes out.
You just want to go bullish?
Yeah.
Well, guess what? You can pay $33, which basically means your break even becomes 66, literally to the thousandth of a penny right now on the dot. Your break even becomes 66.33, and you have profit potential anywhere upwards. We just like looking at both sides because you don't need to pick a direction. You just need to pick whether you think the instrument's going to become, the underlying is going to become either more volatile or less volatile.
And in most times you get movement.
And we got 3.5 minutes until those numbers come out.
Stay right there, folks. Tommy and I are going to be coming right back. And right now we have that oil contract is flat out 66 on the nose.
On the dot.
You got to love it.
We'll see where it is when we come back.
Stay right there, folks. Come right back. Welcome back, folks. Well, this is quite a twist.
We got quite a number. So we have inventories falling 4.1 million barrels. Expectation was not even close to that. Bloomberg user survey, to scroll down before we jump back to the chart, was a rise of 713. And to see how that is playing out, check out that jump. 65 cents automatically. Even if you were trading the 230s, you jump to a profitable position in the span of about 4 seconds as we proceed to trade higher.
That's pretty amazing.
So to again,
what a miss.
Yeah, and they've been big numbers across the board, it seems like, recently. But yeah, this, within the span of literally 4 seconds from that number coming out, oil jumps about 65, 70 cents. So all of your value would be in the bullish side of any trade you're making. So here's your bullish spread. This was the daily one.
Let's bring up the noon one.
Sure, yeah. So jumping back to the noon expirations, our bullish spread would have went from 66 to 67.50. There's your bullish spread. Pretty tight bid offer right around where the market is trading at.
Yeah.
And again, you can trade these out. You could close this out at any time. This trade was going to cost us about $45. Your break even would have been about $66.45. So automatically, you're able to lock in $70, putting up 45 for both sides of the trade. And just keeping in mind, if you ever got a huge turnaround, I'm not sure that's going to happen today with this type of action, but if it did trade below $66 before expiration, your bearish spread still remains active. Now, that's going to be pretty far on the money right now. You could get literally 1 penny for it if you wanted, or $1, in terms of what you're paying. But yeah, pretty big number, man. We'll check back in. Higher prices keep coming at us in those gas prices.
I'd really love to understand how you can get such a miss between the API and EIA, because that's a good one, right?
Definitely.
I believe that last night when I did the API, I believe it was a build. It was a small build, but I believe it was a build.
So to break down the full numbers here, now that's where there was, and you get the median analyst estimate, right, which is the big number really, and then you have a Bloomberg survey. Having a Bloomberg terminal, you get to see a Bloomberg survey, which is pretty important to the market as well. So the median analyst estimate was a decline of 1.2. So the Bloomberg user survey was an increase of 700. So there was already some angst and wonder about where those usually aren't that separate.
Right.
But still blew it away in terms of a decline of 4.1 million barrels.
We're using oil now. I mean, all the way down. Even the distilled. Look at the distilled. They were looking for a build of 500,000 barrels, and they got a drawdown was 2.1 million barrels.
Yeah, definitely. Definitely. And that's, part of
gasoline, the same deal. Gasoline, they were looking for, what, a build of a million. A million. They got a drawdown of 2.2.
Yeah, big numbers across the board for sure. And that's what the next comment speaks to in terms of surprise draw. After API reported yesterday that inventories were likely going to rise. More than half of the decline came from the Midwest. And looks like every region, though, drew. So it's every region across the board. And, there's a glimpse of what that chart looks like, and we'll just check back one more time before we jump over. So pulling back a bit is in 65.60, and that's where you want to have quick fingers sometimes. That's a good trade in the span of what, a 10-minute trade, right? You put up $45 maybe for that noon. Yeah. You're able to sell it out at 70. That's per contract, of course, and because you can't complain. And as in, you can't complain when you get that to move that quickly, because you got to keep in mind that your profits are capped here at $67.50. So it's not like I'm just going to let this run maybe for $2. So you want to keep in mind with, is it worth risking a 30-cent pullback if you only have profit potential for another 70 cents to the upside?
That's right.
Right. Yeah. So we'll check back.
Pretty cool.
Check back. I'm sure we're going to see a little volatility for the rest of the day with that type of a number for sure.
Welcome back, folks. Dow up 6, NASDAQ up 24, S&P's up 4. Let's go see where we're at with oil.
Let's check it out. So it's about 10:55. We're nearing the end of the 10 o'clock hour. And, yeah, that first spike seems to be the biggest one so far. We were up there at 66.70. Really, the spike high, 66.72. We've pulled back a solid 25 cents from that level, 66.46 currently. And, again, you have the 11 a.m. expirations, you have the noons, you have the 2:30s. No matter what you're looking at, we'll see where this plays out. But interesting nonetheless, and a little bit of a pullback. That's why it's never a bad idea to take profits when you get them in the span of about 18 seconds after those numbers come out. We'll see where oil sets.